have made Washington's businesses their home, as well as created jobs and brought record investment here into our state. So the state has done incredibly well, so much so that the fear-mongering you're starting to hear from people in Olympia who claim that some of the initiatives we're going to talk about today will have a disastrous impact on our budget. Simply not true. And we've got numbers to show you. Before we get into the first initiative, 21-24, and I will share all these links with you so you can take a look at this stuff at your own leisure, is a history over the last 10 years. In the last 10 years alone, our tax collections have more than doubled. We've had a record 103% increase in tax collections from about 17.9 billion a year in 2014 to over 36.4 billion here in 2023. That is huge. It has brought enormous surplus revenues every year. Legislators in Olympia come and find out that they've got even more money naturally to spend without raising taxes. Yet, in spite of that, there's been over 50 tax increases over the last 10 years. And those taxes and increases make it more difficult to do business, to put a family budget together, to buy a home, sell a home. It just makes your life more and more difficult while enriching really the bureaucracy in Olympia. Again, I mentioned I will share the link that has all those details with you here soon. I want to turn our attention to the first initiative, 21-24, which is the long-term care optional initiative. For a brief background, in 2019, the state passed the long-term care initiative that mandated, that forced you as a Washington individual to buy an insurance policy, with very few opt-outs and a lot of restrictions on how that member could be used. It was a first in the nation, and I think one of something that was highly inappropriate for a state to be involved in, mandating and then becoming an insurance program. And so Initiative 21-24 allows that program to be optional. It'll go back to the good old days of 2018, where if you wanted a long-term care policy, you could get one in the private market. Or in this case, it would allow you to get one from the state if you so choose. Not only did people not want this, they told us that in an overwhelming 2-to-1 vote against this initiative, or against this long-term care tax in advisory vote number 20 after that bill was passed. And yet here we are 4 years later, implementing a program that most people are realizing is not worth the cost, and it's taking away from their bottom line. So what does it mean if we make this optional? It's as simple as that. If you want that long-term care policy through the state, you can participate and contribute. If you don't, you won't have to. No doubt, if you're on this call, you've seen some of the restrictions on this long-term care policy, including work requirements that mean if you're a working mom, for example, and you work for a few years and then decide to take a few years off as you're raising your young children and then go back into the workplace, if you're out within a certain period of time, you have to start back over from the beginning. Additionally, the program is incredibly restrictive and is a one-time benefit. So whereas it may provide a few months in a good case scenario of long-term care benefits, you're basically back to square one after it's over. There was a limited opt-out period where people could secure their own private marketplace insurance, but most people didn't know it. Additionally, the state created a supply problem by flooding the people that did know, trying to get private policies, that effectively shut down the private market as well. So again, Olympia will be just fine if this is an optional program. It's not something that I believe state government should be involved in. We're not an insurance company, nor should we be. And it's not really a core function of the government of Washington state. So with that, I'm going to turn it over for some personal testimony.
All right. Thank you for that overview. Jessica is our first personal testimony, and she has over 25 years of experience in the healthcare field with an emphasis. Oh, and here's Sharon. Hi, Sharon. With an emphasis on the geriatric population. She has had firsthand experience with the struggles of Washington State's long-term care program. And so, Jessica, we will turn it over to you. Let's see, here we go. Jessica, you're muted. Would you mind unmuting?
Okay, I just wanted to make sure. Hi, everybody. How are you guys today? Thanks for joining. So like Hallie said, I've been in long-term care for 14 years now, been in the medical field 25 to 30. Every single day I do what's called placement services. And so that's where I'm actually in the field today, which is why if you hear cars going by, I'm in between tours. So I've been doing what we call placement for 3 years, and my average placement is about $8,000. So when mom or dad need services, they move into an assisted living, adult family home, unfortunately, maybe a skilled nursing. And we start those prices at about 8,000. You can look online and see that, you know, they'll say prices starting at 4,200. Well, 4,200 doesn't include care. That's room and board. And so when we look at that $8,000, and the cap on how much your care is going to cost, say, you know, I'm 44, say in 30 years, if I'm 74, that price tag is probably going to be well over 12,000. That gives me 3 months in an assisted living that will be paid for by the state. In my opinion, this is like a supplement to Medicaid. It's not the government's job to set my money aside for me. The chances of me actually living in Washington until retirement are low. I'd probably move south or something. So all of that money is essentially being donated to supplement Medicaid. I haven't quite done the math of putting it in, but I feel like this is a really poor decision by Washington State. And I will be voting to give people the choice for their long-term care. It is important, and those companies are coming along better here in the last few years. There's some good ones out there, but often long-term care it's kind of a pain, but if you pay into it, it's well worth it. It is not well worth it to have $36,000 set aside for you by Washington State. So Hallie has my information. If you guys want any information, in my opinion, you can contact me, but I would hope that we can get this repealed and brought back to the people.
Thank you so much, Jessica, and thank you for taking a little time out from your day in the field doing the people's work. We appreciate you spending some time with us.
Thanks so much, Hallie.
Thank you. Representative Corry, I will turn it back to you to take us through I-2109.
Awesome. Thanks, Hallie. So I-2109 would repeal Washington's capital gains excise tax. And this is another interesting one that uses a lot of Olympia speak to get around our state constitution. As you may or may not be aware, that income in Washington state has to be taxed uniformly. That means you can't have a progressive income tax. You could have a flat tax, but you can't have a progressive income tax. And so lawmakers in Olympia seeking to get around that created what they call an excise tax on capital gains. So they're not taxing your income, they're taxing the transaction that caused you to get the income, but the actual tax is based on your income gain. So it really is an income tax by another name. Proponents or opponents of this initiative, I should say, have long argued a couple things. One, that only the wealthy will ever pay, the millionaires and billionaires, the very rich will ever pay, and it will never impact most Washingtonians. And we know that's not true. And how do we know that's not true? Because they have already offered a variety of bills to lower that threshold. One bill lowered the threshold, the exemption that currently sits at about $250,000 to $15,000. That would affect a lot more Washingtonians than the current program. Additionally, they tried to expand this notion of an excise tax on other industries' net wages. So we know for a fact that they would consider making this more progressive and across to more individuals because they've already offered those proposals. The other fact you're hearing is that, well, if you pass this capital gains tax, it would jeopardize critical funding for public schools. In fact, that is also not true. What we know and how the law is written, because capital gains taxes are so incredibly volatile, for the first 500 million, not a dime goes to public schools. It funds other programs in the thing. It's only after that 500 million where a public school would potentially receive some money. So even the people that wrote the bill and the budget writers know it's such a volatile tax that they don't want to rely on that. So when you hear that, again, it's a misnomer to say if this was passed, it's going to cut funding to public schools. We know that it's something that won't impact our state's bottom line, that our budgets are already well funded enough. And mind you, when you hear the conversation, and I'll probably say this again on the next initiative, when people tell you that it would be a critical blow to our budgets, it's simply going back to a budget of 2 years ago, which was almost $70 billion to begin with. This is really a scare tactic used because lawmakers in Olympia want to continue spending your money. And what is this? What is, the capital gains tax have to do with average Washingtonians? It's jobs. It's job creators leaving our state. We have seen multiple high-profile businessmen leave our state, both directly for themselves and for their entire companies. That means, potentially thousands of jobs lost, good, middle-class working jobs. And so repealing this initiative not only would not really impact our public schools, but would potentially mean better economic opportunities for Washingtonians across the state. I'm going to turn it back over to Hallie for a discussion with another panelist.
Thank you. We are going to be having Sharon, a CPA and local community activist, she's going to be offering her perspective on 2109. Sharon's been involved with a number of local groups that seek to elevate the voice of the people and ensure that government is held accountable. So Sharon, I will turn it over to you.
Okay, thank you. Oh, I can't start my video. All right. I'm sitting in a corner, I'm standing in the corner of the Pierce County Annex, which is a Pierce County place where they collect taxes, but taking a break from the Planning Commission. I will say that as a tax accountant, first, the concept of the capital gains is against our Constitution and should never have been allowed to move forward. And the capital gains tax, it uses the word capital gains. Words have meaning, and that specific word has meaning that it is a type of asset. That means it's a tangible item for the most part that is being sold. And it is the camel's nose under the tent to open up the doorway to all income taxes. Believe that once we set up, as we have done, the Department of Revenue to allow a system to create capital gains tax, it is a system that allows the Department of Revenue to audit your personal tax return. Washington State depends on B&O taxes, business and occupation taxes, and sales tax, of which only businesses get audited. Only businesses have to fork over the taxes. And now they've opened the gateway to come into people's homes. As Representative Corry has said, it started off being this high number, so it could get great buy-in. Most people are thinking, no, it's not going to affect me, but it does affect a lot of people. The other kinds of people it affects, I have clients that inherited their father's apartment house or their parents' apartment house, and now they're selling it. They're being hit with this capital gains tax. It's not just for people that have rich things. There are other folks that have the opportunity to sell something of a great asset, and that alone can give them this capital gains tax. The capital gains tax then can affect most people, and they are, because it is a gateway, going to lower the threshold and increase the rate. We need to stop it now. We need to stop it because it is unconstitutional from the Washington State Constitution. It is the wrong thing to do. It harms families, and it may not harm your family this year, but they will get you in a few years from now if left unchallenged. Someone did post a comment I did read, if we already paid it, can we get our money back? My dealings with the Department of Revenue in Washington State is probably not. They will attach and not give back taxes that have been duly collected under the laws at that time. So I'm hoping that as this court case moves forward, and if your friends say, well, it's only for the rich, tell them that the threshold is going lower and lower. And it also attacks the average family that inherits land or sells something of importance. So thank you.
Thank you, Sharon. We so appreciate you, again, taking time out of your actual workday to join us and spending a little bit of time with us at Let's Go Washington. Thank you. Representative Corry, we are going to send it back to you for our final initiative today, I-2117.
Excellent. Thank you. So I-2117 is a repeal of the Climate Commitment Act. Also, we lovingly refer to it as the hidden gas tax. The Climate Commitment Act was passed as a piece of legislation that was going to drastically reduce greenhouse gases in Washington state and help usher in our new clean energy future. And it, in fact, is just another large bureaucratic fund that is being spent on pet projects that actually don't seek to really provide tangible results in reducing impacts to our climate, as well as providing some of the most regressive taxes in our state's history. We have seen it, and it was originally, when this bill was passed, it was going to cost the average Washingtonian pennies per gallon, maybe not even that, according to our governor. But what we've seen is the numbers themselves, both from outside groups as well as from some of Inslee's own internal economists, showed that it would add roughly 40 to 50 cents a gallon to our fuel. And we've seen that. It's been real. Washington, for a while, had some of the highest gas prices in the nation. We're still right up there, number 3 or number 4 currently. And we are far ahead of our neighboring states in Oregon and Idaho. As a matter of fact, there's some charts online that you can actually take a look at that show from the moment CCA went into effect, which is essentially a climate carbon auction, that those fees were added to the direct price of fuel. Additionally, we have to remember that this impacts not just your cost at the pump, but it also impacts the goods you buy at the grocery store, or the food you eat at a restaurant, as higher transportation costs are there. It really is a very very impactful thing to our state's economy and to your bottom line as a consumer in Washington. So repealing this act would essentially end the Climate Commitment Act. It would do away with a program that is adding all these taxes to your fuel and mean, frankly, more savings to your pocket. Some of the programs that they have tried to fund to make you want to continue paying this is a $200 utility rebate. That's one thing I did not mention that I should have, is that this is adding a lot to consumers' heating and cooling on their homes through electric, gas, and other forms of utilities. So that means that you're paying much higher prices to heat and cool your home. Now, they're offering a $200 rebate, but some estimates we've seen have shown that it's averaging about $800 more a year for Washington consumers. And I don't know about you, but there's no way on earth I would voluntarily sign up to pay $800 more in my utilities to get a $200 rebate. So repealing this not only would save you money, but it would actually not have a huge impact on our state's budget. A lot of what we are funding with this could be funded through existing surpluses and revenues if it's prioritized by state government. This is just new additional funding that is being added to your costs at home in this difficult time of rampant inflation and increased costs, making life even more unaffordable. So passing this initiative would have a direct benefit going forward. We'll also make sure that we get a link out and can address these a little more in Q&A before we go to our testimony. But it's important to see that most of this money is being spent on government bureaucracy and things that don't actually reduce carbon output in Washington state, all at the cost to you, the average Washingtonian.
Beautiful. Thank you so much, Representative Corry. Our last speaker today is Justin. He is a lifetime Washingtonian who chose to raise his family and pursue his business and personal goals here in the Evergreen State. He's shown that he's committed to staying in Washington and fighting for the representation that he and his family want to see. So, Justin, I will invite you to tell us about your thoughts on 2117.
Thank you. Thank you for the opportunity to share as well. I'm speaking in favor of 2117 today, as I believe the Climate Commitment Act that was passed into law by the governor's office just did not take into account basic economics, and both at the corporate level, but also for our bank accounts as Washington citizens. I actually referenced that same quote as far as what Inslee shared, that this is going to have a minimal impact, if any, pennies. We're talking about pennies potentially. Not all of this will be passed off to consumers, and what would would be pennies. That's just categorically incorrect. As the cost to provide fuel in Washington goes up, it would just make sense that that would eventually make it to the consumers, not just at the pump, but also in day-to-day costs of needs for the home, and as was mentioned, our utilities, and overall just increasing cost altogether. My role for work, actually, I deal with energy codes continually, and there's accountability measure in effect as we try and conserve energy and do anything towards the environment. We should be able to look and see the evidence of this being a benefit to the environment and actually providing that. And what we're not seeing is any of that at all. In fact, many of the projects that these dollars will go to and have gone to don't have any measurable responsibility to provide to us, saying, hey, this project is actually going to benefit the environment. This is actually what it's going to provide. This is where the energy conservation is going to come into play. There I've seen a lot of notices that our roads, our bridges are going to suffer. That's that the funding that we're not going to be able to even get around anymore because our roads will just get so terrible. And yet the Climate Commitment Act, the funds from that are taxed from us actually don't go to those projects anyway. What is also concerning to me is seeing the recent push to link our carbon markets, the auction markets, to California and Quebec, which have been doing this for more years than we have, and have not seen any measurable results either. It seems silly to link our economy in any way to other failing economies altogether. For instance, California is known as the highest exodus state of late, people leaving that. So all in all, as a father, as a husband raising a family here in Washington, I would like to see more accountability personally in the way that our tax dollars are being used, and personally just less taxes altogether. And this is one that I would absolutely like to see repealed. So I am going to be and will continue to speak in favor of 2117 up until and through the ballot.
Awesome. Thank you so much. That concludes our presentation portion of this webinar. Thank you again, Representative Corry, for taking some time to go through each of the initiatives. There are so many stories like the ones that we heard today. I know many of you, even on this webinar today, can relate to a lot of the situations that our panelists spoke about. So I'd like to thank them again for being willing to share about how they've been affected by some of these policies. We are going to open the floor for questions and answers now. And you can, again, ask a question by submitting it at the Q&A button at the bottom of your screen. And again, if we don't get to your question today, we will follow up at some point this week with answers. So I would like to start just really quickly with one question that we've been hearing kind of across the board. And that is, Representative Corry, if you wouldn't mind speaking to this, just, I know that you brought it up at the beginning, but there's kind of this misconception that so many education and transportation and programs that serve all kinds of different communities of people will be taken away if, we vote yes on all three of these initiatives. So I'm curious if you could speak to just kind of a basic understanding of, will these programs still be funded? Will we be able to continue enjoying the benefits of, what our tax dollars are going to now, or what kind of changes can we expect when each of these initiatives are passed in November?
Yeah, absolutely. The short answer is no. We are not talking about making huge holes in our budget. There's absolutely no impact on the long-term care. That is supposed to be a fully funded private, or not private, but insurance program. It's not supposed to be funding state revenue, so there's no impact there. The Climate Commitment Act spending is mostly on government bureaucracy and other pet projects that most consumers, if you talk to them about, wouldn't largely support. There's solar rebates or electric car rebates for people buying electric cars. I don't think that's a function of government. I don't think the average person says, I want to, subsidize somebody's Tesla when I'm having trouble paying my own bills. And when it comes to capital gains, the amount can be easily backfilled by our state surplus and reprioritizing spending. These are all areas that, if it is a core function of government, we shouldn't need new specialized taxes to pay for them. And again, these are new. We're not talking about getting rid of, some long-standing tax that has been, bedrock to framing Washington State's budget. We're going back to 2 years ago, prior to these taxes being implemented. So this is all new, expanded state spending. The state's doubled its budget in the last 10 years. So my question is, has your household budget doubled in the last 10 years? Where are we spending, our money? What is the priorities? I want to quickly go back to the beginning when we talked about cap gains and make sure I was clear on what I was trying to say. The first 500 millions of the capital gains tax goes to the Education Legacy Trust account. And that funding gets spent in a variety of areas, including early learning and other areas. It's only after that 500 million that goes to public school construction, which is one of the areas that is being weaponized against that initiative for capital gains. And mind you, we can fill that money. We can, in any given biennium, we could fill that 500 to 700 million with projects we already have, with money we're already receiving. So it's actually very small when you consider the overall spending. Current spending for 23-24 in K-12 education is $31.2 billion. So when people try to weaponize this small portion, it's really just simply not true. And if it is a priority of government for us to fund additional pre-K or other functions, we can do that within existing revenues.
Awesome. Thank you so much for answering that. I know that gets a lot of confusion, so it's helpful for us to kind of have those insights right in front of us. We're going to go back to the capital gains tax a little bit. We had a few questions come through during that presentation portion. What does the capital gains excise tax fund?
Yeah, so just again, the first 500 million goes into the Education Legacy Trust account that funds a variety of pre-K, other childcare, schools, higher ed programs. It's a mishmash. Again, 500 million out of $31.2 billion in spending. We started the biennium, or excuse me, we started the supplemental budget this year with almost 3 billion in surplus. So with existing revenues already coming in, we could easily pay for it without having an additional tax on Washingtonians.
I just wanted you to double say that answer. Sorry, I just realized you just said it.
No
but there
worries.
you go.
No, it's worth repeating.
I really
Absolutely.
want people to understand it. I don't think this has been answered, but it is still about capital gains. Does this include real estate? Do you know if it includes real estate?
So it's a mixed answer for cap gains. If it's your primary residence, no. There are some tax situations, depending on how you hold the real estate, that would be subject. So you're going to want to talk to your tax attorney. One thing, I've seen some questions in there, so we might as well answer it now. This initiative repeal is not retroactive, so there would not be refunds due if taxes have already been paid. It would be considered prospective or prospective only. And so any monies paid prior when the tax was deemed valid would not be refunded.
Great, thank you. And then there was a question that came through Representative Corry about does the governor retain the right to drive the cost of CCA higher over time? I don't know if that's one that we can answer right now, unless you know.
So the tricky part is there's a lot of mechanisms within the actual Climate Commitment Act that the legislature would have to change the law. There are drop downs and restrictions on the amount of credits that you can use. So the state is, in my opinion, artificially putting its finger on the scale and messing with scarcity to drive up price. Because again, there's nothing measurable that they need to have done. It's just money coming in that they can then spend out. So that's one of the concerns that we had when they proposed linkage, was that there were other markets struggling, and that they would kind of flood our market, creating it even more expensive here in Washington State.
Great. And then kind of from your side, obviously you're in the legislature, you're seeing kind of what's going on the inside, kind of way better than all of us can from the outside. So just from your perspective and from what you've seen and heard in conversation with other legislators, do you expect these 3 remaining initiatives to pass in November?
So from what I've seen, there's a large fear about these passing because again, it's more money to play with in Olympia. Instead of having to live within their means, they have this whole new way to just spend money again on pet projects. I think there is a real fear these will pass. If you look at the overall 6 initiatives, right? We had 6 that came to the legislature and 3 passed. The 3 that passed didn't have a fiscal impact. They were policy-driven ones. And so I think there is a real fear about these passing, which is why they didn't even let discussion happen on any of them, because they would have to answer for what they're spending the money on. So instead, right now, what you're going to continue to see is this fear mongering where they're going to threaten certain projects and threaten, well, if you vote for this, this is going to go away. And Justin mentioned it, and I think it's worth repeating. One of the projects that I know impacts Eastern Washington is the North-South Corridor Freeway in Spokane. And one of the prominent Democrats was saying, well, this would be impacted, and it's simply not true. CCA money actually cannot go to road maintenance and preservation. So we've got a transportation budget that is funded by the actual gas tax, and that money is not impacted by CCA dollars. So again, a lot of fear mongering on projects that simply it's just not true.
Yep. And then I was going to take a second and just answer. We've had a lot of questions come through about how people can get involved, or if there's polling or insights or anything that can be shared kind of beyond just passing information. And at Let's Go Washington, we are working really hard to make sure that we are combating this kind of misinformation that's going around. So we are always putting together press releases and, using social media to get the message out. Certainly, there are many ways that people can get involved if they're interested in participating in the movement of Let's Go Washington. So if you check out letsgowashington.com, no apostrophe, just the whole thing all the way through, you'll be able to see some of the upcoming events that we have and get a better understanding of just kind of how you can get involved. You can volunteer with us. You can get some materials to speak with friends and family, and even, make your own kind of start your own movement on your social media pages as well. So there are a number of ways to get involved, and more graphics and polling and all that good information to come certainly as well. I think we've got time for maybe 1 or 2 more questions. Representative Corry, this one's going back to you because it's not me. Will I-2117 have any impact on the anti-natural gas mandates?
So it would not. The 2117 is CCA only, so it wouldn't have an impact on the bill that was just passed 1589, I believe, this year. However, the initiative process I've heard, if you want to Google that, I'm not speaking, as a representative, but I hear there's been initiatives filed that would repeal that decision as well. That is maybe out for signatures now or will be soon. So there is another movement that I've heard of that is seeking to overturn that as well.
Wonderful. All right. It looks like that is all the time that we have. So we are going to conclude this webinar. Again, we are speaking on behalf of voting yes for all 3 of these initiatives. We had a little mix up there, but it's yes on 2117, 2109, and 2124. Thank you all so much for joining us. And of course, a special thank you to Representative Corry for your time and your insight and answering all these questions for us. We are looking forward to having more opportunities like this for the public to get involved and to become educated. We are rolling out a town hall series that you can find on our website. Again, that's letsgowashington.com, and you can see all the good stuff that's going on and all kinds of different ways to get involved. So thank you so much, and we look forward to fixing what's broken with all of you together. Have a good one.